welcome to Seven Investing Live. It's our live stream event where we talk about several of the most innovative and insightful things in the stock market. My name is Simon Erickson. I'm founder and CEO of Seven Investing. Thanks for joining us. We're typically here every Monday, Wednesday, and Friday at 10 a.m. Eastern Time. Due to some technical difficulties on my side of things today, we're starting off a little bit later here today. I'm with Heather Horton, our executive producer of the show. We've got a really good show today. It's been 47 days now since the SpaceX IPO, the world's largest initial public offering of all time. And as you would expect, it's one of those other largest and most important things that Elon Musk has done in his career. This is now a massive company that went public at an absolutely massive valuation as well. But what is in store for investors going forward? Is this a good time to buy now that the shares are coming back down to earth? And what about the company's three division really stands out that we should be paying more attention to? We're going to dig into SpaceX here throughout the entire show. If you do have questions, please post them to our YouTube channel. Please post them within the chat here on Riverside, or even on our own Twitter X, which is owned by SpaceX. You can place them any one of those at the live time. I also encourage you to join our show and subscribe to our YouTube channel. We're actually doing quite well with this year, Heather. We've had quite a few conversations about some neat things. Pretty excited to jump right in with SpaceX here today.
Yeah, I'm really excited to talk about this. It's been a pretty wild IPO.
It certainly has. Let's talk about that wild IPO first and foremost, because it was June the 12th, 2026, that SpaceX went public at a $1.77 trillion valuation. It raised $75 billion of capital in this equity raise, which is approximately 4% of the entire outstanding shares, right? This was massive. First of all and foremost, you have to look at a number, $75 billion, really never been done before. We're giving Elon Musk, the world's greatest and most efficient disruptor of industries, a boatload of capital to go to work with. But shares have come back down to earth here quite a bit in the last couple of days and weeks. We now see a SpaceX at a lower stock price than it was before, a lower valuation than it was when it came out here at the IPO. And a lot of people are questioning, did we get a little too excited and euphoric about this right out there out of the gate? And what is a reasonable valuation going forward? So to get to that, this is going to be a longer conversation than we'll get through here in 30 minutes here today. SpaceX is a very complex organization, but I want to talk first about why the company was founded back in 2002, 24 years ago. What's some of the progress it's made in the 2.5 decades since then? And then what are the divisions that it's organized as right now? If we look at all three of those divisions and also the history of the company and kind of what its mission is, I think that kind of paints a good picture for investors of where we're going to go going forward. So let's go to SpaceX.com. Let's check out this company's website. Look at some of the outrageous missions that this company has done since, again, it was founded back in 2002. I'm going to go back in time. Let's go back to the origination of why this company was created in the very first place. And let's look at this quote here. You want to wake up in the morning and think your future is going to be great. And that's what being a spacefaring civilization is all about. It's all about believing the future, thinking the future will be better than the past. And I can't think of anything more exciting than going out there and being among the stars. No, that was not from the Starship Enterprise or a Star Trek or Star Wars episode. That's actually from Elon Musk, who is the founder and CEO of Space Exploration Technologies. The reason he started this, if we go back in time to 2001, this is a long time ago, Elon Musk was very interested in having a multi-planetary colonization for our humanity, for our species. He wanted to get outside his Earth, and he said the natural next place to colonize was going to be Mars. And so he goes out and he speaks to the Russians about buying some of their refurbished ICBM missiles to use as rockets to send a colony of mice and plants to Mars. And the Russians kind of laughed at him. They said, you don't have the money for this. We're not going to sell them to you anyway. And it just didn't go anywhere. But one thing that Elon realized back when he had that meeting 25 years ago was that the typical markup for a rocket that was manufactured for a government-funded mission was 50 times greater. The revenue that they received from was 50 times greater than the cost of sales. This was an extremely profitable business, and there was only a handful of customers, mainly the Russian and American governments, that were even buying rockets for space programs anyway. And so Elon, being Elon, said, you know what, I think I can do this more efficiently than this. In the next year, he founds SpaceX in 2002 and put out a milestone, a goal of having his first rocket launched to Mars by the year 2003 and his first manned mission to Mars by the year 2010. We know that neither of those has happened just yet. We're here in 2026 here today. We haven't gotten a rocket launched to Mars from SpaceX. We haven't gotten a manned human mission to Mars. But really, what Elon has done very well is he brought that sense of urgency as an entrepreneur, that disruptive innovation edge, that looking for efficiencies and looking to get costs down in these massive missions. He brought that to this entire industry and has significantly reduced the cost of launching payloads, not to Mars, but certainly into orbit around Earth. In fact, if we go back and look at the traditional cost per kilogram of payloads that were sent by NASA to the International Space Station, before SpaceX existed, it was typically more than $20,000 per kilogram of payload cargo capacity. On anything that was shipped up to the ISS, if anything that was being put in orbit, it was $20,000 a kilogram. By the time that SpaceX had introduced its Falcon 9 rocket, which was several iterations of its initial Falcon rocket, in the year 2010, this had come down to $2,700 per kilogram, almost an order of magnitude lower than what it was traditionally just a few decades before. And then 8 years later, by the time they introduced the Falcon Heavy in 2018, that pushed that down even farther to $1,400 per kilogram today. And for those who have been following along with the news, we've now got Starship that SpaceX has already been testing out with an even larger payload capacity of up to 100 tons, 100 metric tons of payload capacity on Starship. It's just going to keep pushing down the cost per kilogram of payload. And of course, why is this of interest? This is, of course, of interest for SpaceX and for Elon in his stated mission of getting to Mars. You're going to have to bring a whole lot of stuff if you want to colonize another planet, not just humans, but the supplies, the infrastructure is all going to have to go on there together. This is all part of the long-term plan that was started back in the year 2001 when Elon said he wanted to colonize Mars. So that's kind of where we started. It's been amazing to see the history of where we've gone in those 25 years, kind of drawing it back to the initial mission of the company, how they pushed down the cost per kilogram of the payloads. We've seen the rockets improve from the Falcon 1 and even the original Merlin rockets to the Falcon rockets, now the Falcon 9, now the Falcon Heavy. These are fully reusable rockets that are larger and more powerful since they've gone up there. There it is. Thank you, Heather. On the bottom of this graph, you can kind of see the evolution of the space division there from 2002 when SpaceX was founded. You can kind of see successfully launching and building larger and larger rockets and being the first private company to ever transport astronauts into orbit, and now getting more and more contracts with the operators of the International Space Station. They went on to build the Dragon spacecraft. That's a spacecraft that has the Falcon accompanying rocket. NASA and 4 other organizations around the world are operating the International Space Station. They have significantly reduced the cost of resupplying the ISS thanks to SpaceX's efforts. And then Starship, what we just mentioned, that 100-ton payload capacity, it's 400 feet tall, Heather. This thing is absolutely massive. 100 tons is 220,000 pounds of payload. It's just, you can kind of see this is a company that started with a mission, knew it's not going to jump right to the finish line. Elon always has ambitious milestones. We just know that's what he does, but he's continued to iterate and keep things getting better and better. You can kind of see where he's been and what he's done, but still the goal is to get to Mars. That's the ultimate goal of why SpaceX was founded. I think that's what we're going to be keeping an eye on here going forward. And any thoughts on that? I want to get into the 3 divisions, but I want to kind of point out there from the start, this is not a company that was started to, be the optimal financial vehicle of the stock market. This is a company that wants to spend hundreds of billions of dollars for a mission that no other company or business has ever embarked on in the history of the world.
Yeah, SpaceX is such an odd company in that way, of that it's not necessarily about the profits. It's about getting, to me at least, getting people excited to almost self-fund, almost the way you would do a government NASA space program, but international altogether. And it is still a private company and it has shareholders, but it almost feels like a Kickstarter in a way, like huge, gathering money from lots of people to do these big things, more than trying to just become a huge profit margin.
100% true. And Elon realized that to do this, he not only had to get the right technical people and the engineers and the people to build the rockets, but he had to get investors on board too, right? This wasn't going to be something that you can on day one say, hey, guess what? I want to go to Mars and colonize Mars. Can you give me a lot of money to do that? he actually never wanted to bring SpaceX public. Elon has been on the record publicly saying, that SpaceX needs to remain a private company because there's a conflict of interest between his interest in the long-term mission of building out a Mars-based program, conflicting with Wall Street's interest on the short-term and quarterly financial forecasts. So there was really never a mix. He never thought that he was actually going to bring SpaceX public. But today he has. We've raised a lot of money, and it's actually not just a space company. SpaceX is a consolidation of three different divisions. They're actually kind of doing three things that are different, but also interrelated at the same time. The three divisions that SpaceX is organized around is the Space Group, which is what we just talked about, completing missions, building rockets, launching them out in outer space, perhaps ride sharing, carrying other payloads that are not SpaceX's own payloads into certain orbital planes of where their customers want to go. The space division is about 23% of revenues right now. Last year it did $4.1 billion of the fiscal 2025 total revenues. That was the piece that was just for external customers, not used internally for SpaceX's own demands. And again, we talked about the cost per launch. I think that's one of those key factors we need to look at when we're looking at this space division. From $18.5 thousand per kilogram payload in the year that SpaceX was founded, now down to below $1,400 per kilogram, actually down below $1,000 per kilogram today, has shown the massive decrease in cost per kilogram of payload, which of course you can now fund more and more payloads as you get larger and larger rocket ships. So a core of the business is the space division. Another 17% of the business is actually AI. You have seen xAI now is a division of SpaceX, right? This is the one where you're building these massive data centers all across the world, mostly in the United States right now. But Elon wants these massive data centers to run the models that were used for AI training. For those who are familiar with Twitter, now known as X, even though we have stubbornly stuck in with the Twitter name, I will never call it X. I'll always keep calling it Twitter. This is one that runs Grok, the AI models that are embedded into Twitter, that are embedded into any of the models used for any of SpaceX's interests. This is the AI division. It did $3.2 billion of 2025 revenue. That's about 17% of the total sales for the year. These data centers are absolutely massive. In fact, altogether, they've got more than 1 gigawatt of computing power. The largest is in Memphis, Tennessee. Elon calls it the Colossus Project. Right now, it is running at 300 megawatts of computing capacity. It's got more than 200,000 of NVIDIA's GPUs in there. And we're going to be expanding this by an order of magnitude. Elon has already mapped out, he wants to get the power capacity of this up to more than 2 gigawatts of power, and eventually 3 or 4 or 5 gigawatts at some point in the future. Keeping in mind, Heather, America's largest nuclear power plant today in Georgia is right around 4 gigawatts of total power output. You're building now a single supercomputer facility that's going to eventually be drawing more power than the largest nuclear power plant in America right now. That's going to be necessary just for training Grok, using it for AI for the purposes that either Twitter or SpaceX or any of its customers is going to be needing in the future. That's the AI division. And then the very last one is connectivity. This is one that actually a lot of people know SpaceX for right now because it's Starlink. This is a consumer-facing division. If you are not already a customer of AT&T or Verizon or in a really populated urban area, you might want to have or look into having satellite-based internet, right? This is Starlink up there at the top. There's now 9,600, actually more than 10,000 now, but at the time of last year, 9,600 satellites that are in orbit across the world, providing 10.3 million subscribers in 164 countries with broadband internet, right? If you're out in the middle of a rural area, you don't have fiber optic cable that's laid, right in your front yard or close by, you might want to consider broadband internet for those connections. And there's 10 million subscribers across the entire world. And I think that when you're looking at a division like this, which accounts for about 60% of total revenues last year, 11.4 billion in total sales for 2025, this is one where you're kind of looking at not only that subscriber count, but how much are you getting per subscriber? Especially as you're going internationally, right? You can't charge people in other countries the same rates as you can within the United States. You just can't support as high of a price point. So not only the total subscriber count, but the average revenue per subscriber is another important metrics here too. We might even have, Heather, do we have the chart for connectivity? It might show the subscriber count and the ARPU. Perfect, there it is right there. You can kind of see the average revenue per user per month here is decreasing, right? From $99 down to $81, and that is $66 in the first quarter of 2026. might look at that and kind of say, oh, geez, what the heck's going on? Why are people paying less? Well, that's just a function of going into different countries and launching to more subscribers that didn't even have this as an option. So don't read too much into the ARPU going down, except that as you're going internationally, you might not be able to handle as large of a price point. But those are the three divisions. $18.6 billion of revenue in 2025. The company is still growing, most of them at 50% plus per year. But keep in mind, we're at now a $1.5 trillion valuation. And comparing that to roughly $20 billion in total annual sales from all divisions combined, that's 75 times trailing sales. This is still a very, very expensive company, even 47 days after the IPO. A lot of people, I think, wanted this to skyrocket right out of the gate. It did. It actually surpassed $2 billion for a short period of time there, but it has come crashing down to earth. Why? Because the law of large numbers just necessitated this was going to come back down. You only had 4% of shares that were in the public float, right? Only 4% of the outstanding share counts are even tradable by investors like us today. The rest are locked up by insiders and funds. And when you have this lockup period, which is going to start coming online in a couple of months here, you're going to start seeing more and more of those shares available to the public. I think that's going to push the price down even farther. You have the same number of outstanding shares, but I think the price per share has still got some more room to fall here in the near future. It's still an amazing company. You can kind of see the growth in the revenues. You can see the expansion of the divisions. Elon continues to do really impressive things. But I'm still going to say the exact same thing that we said when we mentioned this on the show with Nick Rossillo, a chip stock investor, a couple of weeks ago. Buyer beware when you're buying into IPOs, especially a company that goes public at $1.8 trillion and is the most massive IPO we've ever seen of all time. I mean, it's not just a recipe for investor success. This is something that's going to continue to be the vehicle for Elon to do cool things. Now you get to buy into Twitter and XAI, and you get to buy into Space Group and the Connectivity Group and Starlink. This is kind of like the ultimate way to invest in Elon. The ticker really should have been MUSK, but we'll settle for SpaceX instead. But this is kind of how you look into his mind. You see the innovation of the future. You can package it all together. It's just, I'm going to caution investors, beware, even today at a $1.5 billion market capitalization.
Yeah. I never invest in IPOs, so I'm not like the most excitable when it comes to an IPO. But this is definitely an interesting place that, like, once again, if you're really excited, good place to invest. But as like just a standard investment, it's just not what I'm looking for my portfolio. Um, the lockout period, they have some lockout periods about to end, right? Is that correct?
It's staggered, as I understand. Let me pull up the specifics.
Okay. Because it's only 4%, is that correct, of available shares of the company are actually on the public market?
That's what they floated for the IPO. Yes, 4% of the outstanding shares, $75 billion. And you were right. The first wave of the lockup expansion is August the 6th. So you're absolutely right, Heather. That's coming up pretty soon.
And do you know what percentage of shares are going to be eligible to come online after that lockout?
Looks like 900 million shares. So, do some quick math on what that's going to be worth. But that's a pretty significant amount of shares that's going to be hitting the market here soon.
Mm-hmm. And I assume Elon in the past has kept the majority of shares for Tesla. And I assume that's the plan here, is to make sure he has a majority ownership at all times. Is that true?
He certainly will. What Elon has done with Tesla is try to make it where that he's right around 25% of the voting power of the company. Not necessarily the number of outstanding shares, but basically if Elon can get the same number of votes to agree with him, it's going to push through, right? He's got 25%, he gets another 25%, 51% call it, and then that's going to push through whatever he wants to do. That's what he always wants to have for any company.
Gotcha. That makes sense. It is pretty interesting of how big of a story this was, that it is 4% of shares. It's not a huge piece of this company that actually came public. A lot of money was raised, but it
sure did. And now, the other thing we didn't even mention on this one was the acquisition they made a few days after the IPO, right? They went out and they bought Cursor AI, which is building AI models autonomously, so you can actually build and optimize these models that AI that you're generating, and then have AI continue to optimize them out there. Really, really good if you're competing against Anthropic and Claude. Or OpenAI and then GPT. Elon's got a bone to pick with those guys. You know how he feels about the OpenAI project. It's kind of like Elon I think feels a little slighted by that. He goes out, acquires Cursor AI for $60 billion, all stock, by the way, with a very expensive stock price. Great capital allocation move to use your stock when
Yeah.
it's at its peak like that. And now he's bringing in some of the best AI models of the world that he's going to continue to optimize. He wants to build orbital data centers. There are data centers that are basically built and then launched and then would be operating in outer space. You and I have talked about that before, right? There are some limitations of being on Earth on why data centers cost $50 billion a piece now. Can you get those costs down and actually make them more efficient if you're pulling power from the sun, or you're right down there where it's much, much colder than it is, terrestrially? There's some neat things that Elon wants to do. It's just that it's a lot of money to raise without having a very, very clear plan of how his money is going to be used right now.
Definitely. And
Tesla. One more thing, there's been, well, we're still talking about this. There's been chatter about, is Tesla going to be part of SpaceX? Elon's kind of, scratched his head and said, maybe we'll have to look at how that would look. Tesla right now, as of this morning, is a $1.2 trillion market capitalization. That's pretty rich for SpaceX to handle, but could he take a controlling stake in it? Could he pull it in just like he's done with so many companies in the past? Maybe. Again, SpaceX is kind of the collection of Musk's projects overall right now.
yeah, it's that'd be interesting if they brought Tesla in as well, because everything else kind of goes together. Tesla feels a little like opposite outside of that. Um, I mean, they're only really profiting on Starlink right now, right? I mean, outside Tesla. That's the only way SpaceX is actually making money.
That's correct. And in fact, there's one more graphic that maybe we should show up here. It's one of the capital expenditures. If you have it, we can put it up there. Otherwise, I can just talk to it. SpaceX spent more on CapEx last year than it actually made in revenue. This was going to do just fine. This is perfect. Look at the revenues, $18.67 billion in 2025. And if you kind of scroll that down a little bit there, you can kind of see the cash from investing, $19.4 billion. They spent more on CapEx than they made in revenue last year. There's not many companies you can say that, right? It's very expensive to build data centers. It's very expensive to build facilities for making reusable rockets. It's just this is a cash vacuum, sucking up all the cash of the markets and using it right now. And investors are having the faith that the hopes and dreams that Elon has outlined come to fruition, and they're going to make a ton of money off of this. But to support that kind of capex and that kind of spend, and you're already, negative EBITDA margin when you're coming public, there's so much expectation right now on what this company can do in the future. It's way, way too rich for my blood. Keeping in mind that I'm a growth style investor at my core also, but this is almost egregious, stratospheric kind of valuations that we're still talking about here today.
Outside of a pet stock because you're excited about this, is there any real meat for investors that you can see?
I mean, institutions want to have a piece of this, right? It's kind of like, why did they raise $75 billion? Because there was demand there, right? They were oversubscribed from institutions that wanted to have SpaceX right out of the gate for their fund. Hey, guess what, Mr. Client, Mrs. Client, we've got SpaceX now in the fund. We're very excited about it. But it's still a very, very small percentage of the float. You're not going out there and floating 15%, 20% of the shares out there. You're floating 4%. And then the next four that are going to go out there, next 7% that are going to go out there actually are going to be lockup expirations, right? This is just simply insiders selling their own shares and loading those up out of the market. It's going to be hard to justify a return right now when you're at 75 times trailing revenue and you've got lockup expirations coming online here over the next 11 months through next June. And then just how hot it was, how publicized this was, how much media attention this was in the narrative. I'm proud of Elon. I'm very happy for him. I think he's going to do some amazing things with this company. But as an investor, again, very cautious about buying shares right here.
Yeah, same. It's not for me. Is 4% a normal amount when companies IPO? That's a stat I haven't really looked at before.
All depends. You can see a company that will float out there 10, 20, even 25% of their shares, depending on what you need to raise the money for. I had this conversation yesterday, though, over lunch with a friend of mine who runs a fund, an institutional fund. And, he's just saying the need for raising money is not the same as it used to be. You used to have to go out there and raise a ton of money through venture capital first, and, then through all the series of being a private company. Then you finally get to the IPO and you want to raise as much money as you can for your IPO because it's just expensive to run a business. But we're in a world now, where AI is displacing a lot of human beings for the labor side of this. You don't need a whole lot of capital for software businesses. And most companies are tech companies now that are doing these kinds. There's just not a necessary need to raise billions of dollars through a high profile IPO anymore. Unless you're SpaceX, unless you're going to build orbital data centers and rockets and cool things like this, where there's less competition, but just the world is changing right now. I'm not surprised. This is a low number compared to traditionally how much you would raise in terms of the total. To answer your question, 4% is low compared to what a lot of companies would do. But again, it's changing. If you go out there and say, hey, we're worth $1.8 trillion, we only need to float 4% of this, and you still raise $75 billion, that's a big win in my book.
Yeah. And likely we'll see the shares, I would guess, go down during the lockout expirations, just because we will be seeing more shares and demand, versus supply.
Share
So
price. You think we'll
yeah,
see the
yeah,
share
yes.
price go to? Yeah, exactly.
Yes,
Yeah,
we
there
will
will be more
see the
shares available.
number of shares available go up, and we'll see the share price likely go down.
Yep.
So if this is something you're excited about, don't panic sell. If you have already bought, I feel that's a pretty common graph we've seen when lockout periods end, that yeah, you're getting a flood of shares on the market often. And these are people who have held these shares for, some of them almost 20 years. So
Absolutely. And so Heather, this was part one. I promised that this would be a multi-part conversation, but we wanted to review where has SpaceX been, what has it done, and then kind of how is it organized right now. I want to spend at least one more show here in the near future. And please subscribe to our channel if you want to see this, here on YouTube. But I want to take a closer look at those three divisions. Look at those metrics we discussed, whether it was the AI group, whether it was the space group, whether it was the connectivity group. Let's kind of build out a little roadmap here for investors, at least for 3 to 5 years out. Based on the trajectory we're seeing, based on the metrics that matter, what can we expect from each of these three divisions in terms of top line revenue, in terms of bottom line, or really middle line, if I can call that, operating margins, and then bottom line free cash flow from each of these divisions? There's so much expectation of the growth in the future. What is realistic for SpaceX? And then ultimately, let's package that all together and say, what is a reasonable valuation? Seven Investing, we did this for Tesla. We came out and we said Tesla has to not be a car company to justify the valuation that's at. We're still seeing Tesla chase, level 5 autonomous driving. It's gotten approved in several cities, really, really good, but it's not to the scale that Elon has promised several years ago. And we're not going to see the same timelines for SpaceX either. There's some neat stuff on the horizon, but it's always going to be a few years, maybe in a few decades later than when it's promised to the masses. Let's get an objective understanding of where we would buy shares as investors. We'll talk about that in the next show coming up. I appreciate y'all tuning in to today's show. Again, today, July the 29th. We do have the new recommendation for Seven Investing coming up here on August 1st. I'm excited about this company. This is not a massive company like SpaceX is. This is a small cap company that's probably off your radar, to continue the space related puns. But this is one that I'm really excited about too. I think it's not getting enough attention from investors right now. We're going to be publishing that on Saturday, August the 1st. And we'll come back next week again with some more shows for you here. So please subscribe to our channel, or subscribe with Seven Investing with that link you just saw below. That'll give you 7 free days, including the newest recommendation on Saturday, and all of our premium content. I appreciate you guys. We'll see you again early next week. Have a great weekend.